Well, let's kick off immediately with some other requests. And the next one, of course, is Naspers, one of these giants of the local market. We just see that this share had a beautiful rally. And I mean, all the way from 1,750 to 1,750 to 3,500 in a matter of a few months. And it just shows you a beautiful rally. Now, a lot of investors actually say that the next big money will be made on the MSCI index. And they love it because they say the emerging market index is cheap. Now, if that's cheap, then we must look at this chart. What worries me is this Lampel formation. I know an investor mustn't always look at the gain in price, but for me, I think it's just logical. If a share rallies from 1,760 to 3,500, there will definitely be a few guys that's keen on locking in profits. But let's see. This is a weekly chart, of course, and everybody is keen on the emerging markets. So let's have a look here. I'm seeing a trend down to the downside, and a lot of people will then say, but Frans, this is maybe just a tiny bullish flag in the making. So I hope you guys are right. Let's see here. If Naspers can break this this trend line there, that resistance line at 3,131 and 30 cents, we can easily see a continuation of the pattern. So yes, if you do buy above that, make use of a stop loss of 3,047 Rand and 30 cents. And my targets will be 3,160 and even 3,270 if it bounces back. The only thing that worries me, if the Nasdaq, and I just looked at Nvidia, if the Nasdaq is under pressure, we'll probably see that Naspers is also struggling. But on the other hand, this 40-week moving average tells you that the momentum is still clearly to the upside. And as everybody always say, the trend is your friend. So while this 40-week moving average is a support, the momentum is still to the upside. Let's have a look at the Foschini group. Now, we see now companies all around is saying that there's some problems with them, running into problems. Reason being, it is simple. Load shedding is killing them. They're spending a lot of money on diesel or petrol. And this is what happened. A while back, we showed you guys this V reversal. It did give us a beautiful V reversal. But now what do we see? A high, a lower high, another lower high. And for me, if I look at this chart, I say to myself, the momentum is clearly to the downside. Yes, this is a waterfall formation. The momentum is clearly down. And what do we do then? You just wait. You wait for a little bit of a consolidation before you enter. You wait for maybe a turnaround. But this wonderful company that actually prints money when they're successful are starting to struggling with load shedding. And I can see that's almost the theme with a lot of South African companies that is doing purely business in South Africa, depending on the retailer. Remember, the retailer is under pressure with the higher interest rates, and I believe that job security is also under threat with this load shedding issue. So for the moment, Foschini, for the viewer that asked about it, let's sit on our hands and play a little bit of poker face. Let's have a look at another one. I think it's Jeanette that asked about it. There you are. Ormat Technologies. And she wants to buy it. And she say it's a good company for the long term. And that's immediately then the moment I hear the word long term, I look at the weekly chart. Now let's have a look here. Yes, the share is moving beautifully up. But what worries me, Jeanette, is the following. There's the trend line that supported that rally. And if I do a combination there and I join those two, there you are. There you can see there's the resistance line. There's the support line on a beautiful rising wedge. And as we all know, what is a rising wedge? A rising wedge is a warning formation. And remember, right in the beginning of the show, I showed a share that bounced against the 40-week moving average. That was Silicon Valley Bank, and it rejected that support. It turned into a resistance, and hopefully I'm wrong that this is not going to be the problem with Ormat Technologies. So for you, Jeanette, if you want to buy it, I want first of all this 40-week moving average to turn into a support. Where's that level? Let's get that level for you. That level sits at 87.80. If it breaks above 87.80, yes, the momentum can turn back. We need to get back above that line, and then you can maybe say that the momentum to the upside will be in place. But if you do buy above that 40-week moving average, use a stop loss of 84.30. And I believe in this kind of market, you maybe need to stick to your stop loss so that you don't run into troubles if you are wrong. And of course, as always, if you buy a share for the long term, don't go out and buy the whole lot at one time. Maybe phase yourself in for a little bit. Let's look at one of the top companies in the world, and that is Bidvest. And why do I say it's one of the top companies in the world? It is because Bidvest is the company, and I read it the other day and I was quite surprised that it actually outperformed Mr. Warren Buffett's Berkshire Hathaway. They said that this share over the last 10 years outperformed that company. Now, can you believe it? Bidvest is a beautiful industrial-driven company. So I think the momentum to the up, of course, here beautifully up. But for me, I always say I'm looking out for a lamp ball formation. I'm never keen on a lamp ball formation. I'm always a little bit nervous. Let's just change that into candles so that we can see. And here you can quickly see something that I pick up with the eye. I always like to use just the waves, and there's 1, 2, 3, 4, 5, and it extends. It's an extended one, so everybody's just so happy. I always say that the share goes up in 5 waves, usually, and then it gives us a pullback. But this one actually just went right through. Now, some of the other clever guys will say, that's 1, that's 2, that's 3, that's 4, and we're busy with wave 5. For me, quite simple. I will say, I will look at this Harami candle here. Harami candle usually is a candle that makes me a little bit worried, especially if you've got this beautiful Marubozu candle. And for me, you can hold on to Bidvest, because the question was actually if the person wants to buy it. For me, I will not buy it. I mean, a rally from 195 to 275 in a matter of 4 months is a lot, but I will get nervous if the share breaks below 255.03. For those viewers that wants to buy the company, wait for a pullback. I think this beautiful move, I mean, in 1 week from 240 all the way to 278 is a big and a strong move. So I will sit on my hands. I will not chase the momentum. I'll wait for a pullback, because even you've got big and wonderful companies like Bidvest, they sometimes give you beautiful pullbacks where you can buy it. And there's a classic example. There's a classic example. You don't need to rush in and just buy it. Let's have a look at Altria. Peter asked about Altria, and he said to me, listen, Frans, I want to buy this company also for the long term. Well, first of all, immediately if I look at the company, what do I see? I see a beautiful base here. I see that there's a resistance line. But what worries me is that I'm also seeing a rising wedge. Now, there you are. Now, for me, it's quite simple. We still move above the 40-week moving average. And I will say, if I want to buy it for the medium or the long term, the classic thing for me will be to buy it as close to this 40-week moving average. Because if I do buy it above there, we're at the support line there. If it breaks down there, you've got a nice tight stop loss. There's my tight stop loss of $44.08. My 40 weeks wait at $45. So it's a nice tight stop loss. I will buy it there and hope that it goes there. But if I'm wrong, the stop loss will protect me. Because if this rising wedge plays out, and our time is almost out, it can maybe break below there, and it can take this company all the way down to $41.90. In this kind of market, play safe, don't buy too big. And if you have a profit, like for myself, the other day I had a quick 4% on a share, I just took it and walk away. And that's the rule of the game now, until the markets are showing their clear hands. Well, thank you for watching the show. Visit our website, www.fransdeklerk.com, for more info. And as always, if the Lord may help us, we'll see and talk again to you.